Yeah.
Okay.
Yenə də hamını salamlayıram. Bugün üçüncü artıq webinarımızdır. Bugünkü webinar Avropa və Amerikada, Avropa İttifaqı və Amerikada şirkətin belə deyək də qurulmasına həsr olunub. Yəni e-commerce belə deyək də fəaliyyəti çərçivəsində Avropa və Amerikada şirkətin qurulmasıdır. Yəni bunun üstünlükləri nə üstünlüklər bu verə bilər əgər siz e-commerce ilə məşğul olursunuz Azərbaycanla. Yenə də indi ümid edirəm indi iştirak edənlər bundan əvvəlki görüşlərimizdə iştirak ediblər. Uzun təqdimata ehtiyac yoxdur. Mənim adım Eldar Adilzadədir. Bugünkü təlimimiz AzExpertlə bir yerdə həyata keçirilir və sözü verirəm IC'nin eksperti Muhammed Esfi'yə. So, Muhammed, floor is yours.
Thank you, Eldar. Thank you, everyone, for being here and giving me the opportunity to share a bit of experience and knowledge that I hope will be beneficial for you. And I think just like Eldar has said, this is about company formation in the US and the EU for Azeri entrepreneurs like you guys who want to use e-commerce to expand your market. And I have to start with a little bit of a disclaimer is that we cannot really cover everything in 1 hour, 1 hour and a half, or even 2 hours, because when you take the US and the EU, we are talking about 69 jurisdictions. I mean, 69 is kind of little countries. So it's a lot of information, but what I will try to share with you is how do you select the best entry point and why you should enter from this region or this country in Europe or in the US, so that next time you can restudy it, or if you apply it to another region, you can apply the same technique. So let's dive into this. I'll share with you the agenda. So I will start with the point number 1, which is rapidly covering why you should form a company abroad to do e-commerce. What are the advantages? Is it worth the hassle? Second point is I will present to you how it works in terms of company formation in the US, the different states and the different ways to start forming a company in the US. And then point number 3 is a kind of a light form of company formation in Europe. It's called fiscal representation. And I will explain to you what it is. That's point number 3. And point number 4, we will see the traditional company formation in Europe in multiple countries, and we will compare them together. I guess, Eldar, I need to validate the newcomers still. Yes. The point number 5 will be a rapid summary of the best strategies to enter the US and Europe. And because this is a complex theme and a sensitive one, because we're talking about laws, taxes, and so on, that would be nice if we can take a bit more time and you all don't hesitate to ask questions in the last part, questions and answers. So technically, this webinar is a little bit shorter so that we have more time. I mean, a little bit shorter on my side, on my speaking side, so that we can have more time for questions and answers. Okay, let's see why you should register a company abroad for e-commerce. So I think the 5 main advantages, there are many advantages and many of them you already know them. And I'm trying to give the most critical advantages. The number 1 and actually lapping one is to build trust. So the best way to have the trust of your buyer, even if it's a consumer or a B2B business, if you have a company in his country, in the country of the buyer, then you already came closer to his requirements, to his fears. And if some of you were here in our first 2 webinars about payments and about, I think it was about payments especially that I talked about this, is that the customer is always looking from his perspective, his laws, his protection. So when you form a company in his country, you become a local provider, and he trusts you or she trusts you like a local provider. So that's point number one, building the trust. I think this is the best way to build trust. And then the fact that you register in a given country, you technically become the official importer. So you are importing the products or services in that target country by yourself. So that reduces intermediaries and reduces costs, but also it gives you a better control of the market, and you can go up to the level of retail. You can retail by yourself. And this is what we're looking at, B2C e-commerce. So if you really want to be effective with B2C e-commerce, then the advantage is to register a company over there in the target market. Point number three. Sorry, I have the window popping up about newcomers. So point number three is you get access to the target market payment solutions. Like we said in the e-payment webinar, that the best is to have what the user is used to in his country. So many solutions are not open when you're not an EU company or you're not a US company. So once you register in that country, in one of the European or American states, then you access all these local payment solutions that the users like Stripe and so on, PayPal. The fourth, which is often kind of hidden by the payment solutions, is actually the logistics. And once you become a local company in America or a local company in Europe, you get access to a whole new spectrum of providers for warehousing, e-fulfillment, shipping, returns, all these things that make e-commerce, especially B2C e-commerce logistics, complicated when you're trying to sell directly from Azerbaijan. So that's point number four, the advantage of logistics. And then point number five is that once you're registered in these countries, you actually have access to many high-value marketplaces. Just like for now, as an Azeri enterprise, you cannot open an Amazon EU account. But if you register an EU company, then you can open an Amazon account. And likewise for eBay, Etsy, you can access their Prime services. So this is for this part, the advantages. And we have another key information for you to consider. Actually, from my experience, the most complicated barrier or the biggest barrier for cross-border e-commerce is logistics and payments at the beginning or marketing, but the true underlying complication that nobody wants to look at directly is the problem of the tax, the fiscal aspects. And getting your taxes right is not only a requirement, I put it in red, but it's also the key to success, the only key to success, basically. Because without this specific brick, everything else is complicated, expensive, hidden, half done, and you never reach the level that your buyers may expect. So you never reach the whole spectrum of your sales potential unless you tackle this tax problem. And I'm going to share with you and simplify how we can solve these taxes. And basically, there are two tax families. The first tax family is what we call direct tax. This one, you know it very well, just like you have in Azerbaijan. It's also called the income tax. This is what your company has to pay on its net profit. So whatever you have as expenses are deducted. So it's the same principle as in Azerbaijan. You do your accounting, and whatever profit is made at the end, that is what is taxed. Some countries or some types of companies, they have this corporate tax applied on the turnover. I think in Azerbaijan also for small companies, you can choose to have your tax applied on your sales, on your turnover, like I don't remember 1% or 0.5%, but otherwise it's on the net income. And one of the advantages of or good things to know about corporate tax is that when you're doing international trade, you can leverage, you can make use of your country's non-double taxation agreement with other countries. For example, if Azerbaijan has a non-double taxation agreement with the United States, then if you do a subsidiary in the United States, you can choose to pay taxes in the US or in Azerbaijan and not in both of them, because this is the same business doing business in the two countries. So that's what is called double taxation treaties that you can benefit from. And I think this part, the direct taxes, are pretty much known and covered because it's already applied in your country. Now, what I want to attract your attention to is the other half of the tax problem. And that is what we call indirect taxes. Now, indirect taxes is actually not, it's called the consumer tax, meaning that this tax is not applied on your company. It's applied on the buyer. And this is what is called, in the US, it's called, sorry, in Europe, it's called the VAT. Sorry, I'm going to pause here just to ask a question to Eldar. Eldar, are you validating the newcomers so that I can close the window?
Yeah, sure. I will take care of that.
Ah, cool. So,
Yeah.
because
I'm still a host. You are a co-host, so I will admit all those who enter the waiting room.
Yeah. That makes it easier for me. Thank you very much.
Yeah.
So I continue. So indirect taxes, I was saying that it's called VAT in Europe or value added tax. And in the US, it can have different names. It's usually called sales tax or sometimes duty tax or due tax or use tax, but it means the same. It's a consumer tax. It is the tax that comes at the very end of the supply chain when it reaches the consumer. So this tax is calculated on the final amount, including shipping. So this is what the indirect tax is about. And I put it at the bottom over there. This is like a tax that you cannot escape. So even if you have not dealt with it right now and you export it to Europe, bear in mind that if you have not settled it, that means that your client had to. So it's either you as a seller or the buyer that is going to have to deal with this sales tax. Now, if you want to earn more buyers, it is better to take this burden out of your consumer, out of your buyer, even B2B. If you can propose this added value of telling him, look, I have everything covered. You can buy from me like you buy from a local company. Then you're going to win much more deals. So this is about the two taxes. And just as a recap in green, it's repeating that if you relieve your buyer from this issue, if you want to relieve your buyer from this issue, then you need to register in his country so that you can get a tax ID in his country and you can settle this VAT and sales tax issue. Now, so that you can register and obtain this tax ID, there are mainly three types of company formations, or today at least we're going to cover three of them. The first one is that I'm going to walk you through the US system, how to form a company in the US and which state to choose, which type of company, which form of company, LLC, C Corp, there are so many other types. And then I will give you some indication as to the costs. Likewise, I will present to you the EU fiscal representation that I told you about earlier. So it has different types. You can have, in some countries, you must have a local agent, and in some countries, you can do without a local agent, and that will have different advantages and costs, which I will present to you. And finally, in the EU, if the fiscal representation is not enough for your business case, then we're going to see how to form companies in the EU. And I will present to you six I think key countries for you in the EU to study. I will share with you what form of company and what are the costs involved, so that you have an idea on how all this works. So let's look at the company formation in the US. As you know already, there are 51 states in the US. By state, we mean a jurisdiction, which means which you should consider as an entrepreneur as a different country. If you want to avoid your headache of not understanding, just forget that the United States is a country. Think that Delaware is a country, Nevada is a country, California is a country, because really these states, they apply rules at their borders with other states, even though they are all in the United States of America. And this is when it comes to the rules of sales taxes. They all have different sales taxes, different rules, what you can sell, what you cannot sell, different permits. They call it sales permit, they call it trade permit. So we have 51 possible countries from where we can bring our products into the US. Now, the three that are the most talked about in the internet are Delaware, Wyoming, and Nevada. And the reason is that these states don't have sales taxes. So they don't have local use tax, they don't have local state tax, at least in some cities. And I'm going to share with you a little bit more information because I hear a lot of good things and a lot of nonsense about which state you should choose and why. And I'm going to share with you two very simple decision questions that you need to ask yourself, so that you don't listen to something that is not based on a real commercial question. So the first one, when you deal with international trade, is that you want to know if this state or city has a seaport. Why? Because once you start to do business, and especially if you start to have volume, you're going to want to reduce your shipping costs. Now, the cheapest method of shipping in the world right now is sea freight, maritime shipping. So if you have a seaport in that state, that means that you can send the container directly and unload the container and have less fees, because they don't need to put it in a truck and drive across the country to reach that state. So that's, I think, question number one that you need to ask yourself. Do I have a seaport in that jurisdiction, in that state? The second question that you need to ask yourself is, once I bring my products and my merchandise in that state, am I obliged to pay that state taxes at the moment I land my goods? Because then this will create for you a cash flow issue. So it's interesting, if I can save the sales tax for now and have my products in the US ground, then it's good, because I can keep that 8%, I can keep that 10% in my cash flow until I cash the payment, I receive the payment from my clients, and then I have no problem to pay my sales tax, be it a California sales tax, be it Nevada they don't have, but be it a New York state tax, or wherever my buyer is. So these are the two fundamental questions that you need to ask yourself to choose which state you want to work with in the US from a commercial perspective, not from an emotional or image or branding perspective. That would be another discussion. So when we take these two questions into consideration, then the choice is actually pretty obvious, is that the only state that has both advantages, meaning it has a seaport and it has 0% of sales tax, is Delaware. The others, they either have a seaport, or they don't have a seaport, or they have a tax. For example, if I wanted to import directly from New York State, because New York is a big port as well, then I will have to advance 8.9% as soon as my merchandise reach the New York State. But if I import the same container or the same pallets in Delaware, which is basically 300 miles or not even 300 miles from the New York seaport, because they are both on the East Coast, then I don't have to advance this 8.9%. So that could be useful, not to save 8.9%, but to reduce its impact on your cash flow. So this is for the how to choose the state you want to deal with in the US. There are, of course, other many advantages that pertain to the choice of state. Like, for example, what they say about Delaware is that the courts of Delaware are pro-business, is that they defend businesses better than other states, but that's always debatable. Some other states also are very business friendly. So I have just taken them like a mechanical questions: seaport, advanced taxes or not. These two simple choice, and you can already see the result. Now, once you have chosen the state, then you have to choose the type of companies. Now, in the US, there are so many types of companies. There are what is called LLC, limited liability company. There are different types of corporations, C Corp, S Corp. There are different forms of ventures. There are different forms of cooperatives, associations, federations, unions, and so many. But the ones that are in practice usable by foreigners like you and me is the LLC and the C Corp. And I'm going to present to you these two companies, because this is the most common question I get. Should I do an LLC or should I do a C corporation? So an LLC on the left side both are a limited liability company. What does it mean to have a limited liability company? Is that your responsibility is capped on the paid up capital that you have done, the shares that you own and their value. That's your responsibility in case the company goes bankrupt. That's what it means. Limited liability company. That means that the U.S. state or the buyers or whoever you're working with, in theory, cannot go after your personal assets. They can only go after the assets and your paid up capital share in the company. So it's a legal protection in terms of defending and dividing the responsibility between your personal life and personal assets and your business assets. Another advantage, especially for American residents, and that's why I put it in brackets here for local, is that the LLC is basically avoids to pay the double income tax, meaning with the C Corp, the company pays the taxes, and then the shareholders, when they take the dividends, they also will pay the income tax. But the LLC allows the members to pay only one tax. That means that if Eldar and me, we do an LLC in the US and we earn, let's say, $100,000 last year. So I get 50,000, he gets 50,000. I will only pay one time the 25% tax for income tax, and Eldar also will only pay 25%. We will not pay the 25% of the company plus 25% of our personal withdrawal or dividend. That's what LLC is used mainly for. Now this, I put it in bracket because when we are foreigners, it's a little bit more complicated because there are some withholding taxes and so on, and you need to consult a fiscalist. So we don't really benefit from it 100%, just like a local group of American shareholders would do. But it's good to know. And then the LLC is somehow a little bit more easy to manage. There is one less document to do, and it's good for small number of partners. It's usually suitable for SMEs that do not have an exit plan. What I mean by exit plan is when you're planning to get investment and sell your company, like a startup. So you want to sell it to Google or another company, or you're looking for a big investor. So LLCs are for companies that are not looking for that mainly. It's for, I'm running this business for my own self with my partner. I may run it 20 years, 30 years. So it's a long-term, small, medium business, or even a big corporation, but we don't plan to bring in so many new investors. The registration cost of an LLC is roughly $500 according to the Stripe Atlas. And in my experience, you can even incorporate a Delaware company for less than that, but keep in mind that $500 is a good start. Now the C Corp on the other side is also a limited liability company, just like the LLC. You're protected in terms of personal assets against the capital that you paid up. Now both the shareholder and the corporation pay taxes, just like I was saying. But then the advantages are that you can have, it's very well structured to accept more shareholders, more partners, more different types of shares, different types of arrangements. So it's a very flexible corporate environment, the C Corp, and it's suitable for onboarding investors, especially equity investors or other accelerators or startup incubators. So it's mainly used by startups, and even for small businesses, sometimes they use C Corp. It costs roughly the same. So these are the small differences between LLC and C Corp. If you hesitate between the two of them, then it may be better to go with the C Corp, because once you go with the LLC, it's very complicated, almost impossible to transform it into a C Corp the day that you want to take an investor. So that would be the main separation, is what do you want to do with your company on the long run? That will separate the choice between LLC and C Corp. I can answer more questions in the last part, of course, but I'm going to move now to share with you how it works. Again, this is, I try to simplify it so that you can digest it. But of course, I will be happy to answer more questions. I mean, technically speaking, we should do one webinar just for the US or just for Delaware because there's so many things to cover. But here I'll try to go fast. And I gave you the 6 major steps that you will have to go through. So the first step is that unless you already know a registered agent in Delaware or Nevada or Wyoming or wherever you want to form your company, the registered agent is somehow like a public notary, half accountant that will represent you as a foreigner on the US ground. They will give you a business address that you can use to register with the state and the US services. So that's the registered agent. And I advise you to check a few of them and see their responsiveness. Maybe some of them speak Russian, which can be good for you in terms of managing the company. Actually, many of them speak Russian because they have a lot of Russian clients. Myself, when I started my first Delaware company about 25 years ago, I chose one that spoke French because at that time my English was very bad. So you may want to go through all their websites and check them. I put for you here the list of all the official registered agents so that you don't go through through an intermediary or a scam. At least you can have the official list here. There are hundreds of agents. So you really have to take a little bit of time and find the one that you feel more comfortable with. It's on the Delaware.gov website, which is the official website of the Delaware state, but you can find the same thing for every state in the US. They have a list of official agents. So that's step number 1. Once you have found and selected and negotiated the prices with your agent, then comes the formation company itself. So they will ask you, do you want an LLC? Do you want a C Corp? So please refer to my slides that I said earlier. And then you will need to choose a company name. So in general, it's good to give them 2 or 3 company names so that if the first one is not available, they can just register the second one. Then of course you pay them, and it takes usually a couple of days, and you should get the company documents in PDF copy. You may, if you wish, order what is called the corporate kit, which is this photo here. So what is a corporate kit is basically a large folder, which is nicely done with gold embroiderment and so on with your company name on it. And inside of it, you have the bylaws, the articles of the company, some legal template documents, the minutes, so that you can write your minutes and meetings minutes. And you also get some share certificates so that you can divide the shares with your partners. So this is a corporate kit. It's not compulsory. It's a nice bonus if you want to have it. So once you have your company documents, then you move to the next step of the company formation, which is applying for the tax ID. Now this tax ID is called EIN. EIN is Employer Identification Number. And this EIN number is given by the IRS. I put you here the link. IRS is the Internal Revenue Services. It's the tax agency of the United States, the federal tax agency. So I put you 2 links. One is the instructions on how you can get it. You can apply by fax. So you can download the PDF, fill it up, sign it, scan it, and then send it by fax. That's one option. You can also send it by courier. And then I put you the second link, which is the PDF itself. So the first link is the instructions how to fill it up. The second link is the PDF itself that you can fill up. So once you fill up and send the EIN, it takes between a week to a month to get the EIN number. But unless you have the EIN number, you cannot go to the next steps. So you have to really be diligent, start this as soon as possible, and make sure and follow up with the IRS, call them to see where is my application, can I get my EIN? Now, once you have your EIN, we can move into the bank account step. The bank account step, and if you were in the last webinar we did about e-payments, the key to get your bank account open is compliance, the documents and information, and you can, we will share with you the link of the webinar on e-payments so that you can go back there. So basically you will find there all the documents and information that you need to prepare for them. And then you also give them your EIN number. And you can, I listed for you the main providers that accept foreigners with US company. So you have SVB Bank, Silicon Valley Bank. They accept you if you have a Delaware company or another company and you have an EIN number. Now, Silicon Valley Bank, they are more into software apps and startups, digital startups, because they're looking at investment, they're looking at equity. So they may not take handicraft, but you can still try. Otherwise, you can open a virtual bank account with Pioneer or with TransferWise, with your Delaware company or with your Nevada or Wyoming company and the EIN number and your passport and all the other documents. You can choose one of these three providers, or even what I do personally is that I open both every time. Pioneer, TransferWise, then I get at least 2 accounts, and then I try with SVB. If SVB accepts me, I use it. If not, I fall back on TransferWise or Pioneer. So this is for the bank account. And once you have the bank account number, then you can go and apply for the payment service provider, PSP, payment gateway. So likewise, you need to give them a compliance file, you give them the EIN, and you give them your US business bank account number. And now you have access to Stripe, Adyen, Square, all these payment solutions that are very liked by the Americans and very known by the Americans and even worldwide. So once you have the PSP account and you have your bank account, you can also now open a marketplace account like Amazon, eBay, or Etsy. And it requires the same documentation. The only thing that is a little bit harder to validate with Amazon, and we will have a training on Friday on how to open an Amazon account, so I will give you more details, is that Amazon will require a certain form of bank statement or a certain list of documents, and I will share with you the whole process on Thursday, sorry, on Thursday or Friday, I forgot. So this is about the 6 steps, and if you need in the questions and answers, I can come back to this specific slide and give you some more details if you need them. Now we have, I think, covered the US part. Let's jump back to Europe, and I'm going to start introducing to you what is a fiscal representation and how maybe you can benefit from it. So this is a big slide, but you can come back to it, and basically a fiscal representation is a lightweight, a simplified way of registering in a given country, and it's specifically for the indirect taxes, for sales taxes and VAT. So this is not a full company. So for example, if I do a fiscal representation in France as an Azeri entrepreneur, I will not have a French company. I will have a French fiscal representation. Now, mechanically, commercially speaking, the French fiscal representation works just like a French company. So you can use your French fiscal representation to sell, buy from France, collect VAT, pay VAT, and so on. So it works like a company, but it is not legally a full company. So that is the definition of a fiscal representation. Now, it has 3 types or 3 requirements. The first one is that what we call full representation. That means that you must have a local fiscal representative. It's like an accountant that will represent you in front of the tax authorities. So when a country requires you a local fiscal agent and a full representation, that is usually more costly. It costs more money because the fiscal agent is taking responsibility on your behalf. And then there is another form, which some countries like Belgium and Netherlands are offering, which is called limited liability representation. So it's also done by fiscal agents, but this time the fiscal agent is responsible for your tax payment only temporary and transaction by transaction. So it's called limited liability. So every time you import a container or a pallet, they can be your fiscal representative just on that pallet import, and then once it's imported and sold, their job is finished. So I will introduce to you how it works and where it works also. And then there is the best fiscal representation, which is when you don't need any agent. And there are few countries, only 3 for your case, that allow an Azeri enterprise to have a fiscal representation in the EU VAT space. It's Germany, the UK, And thanks to a special agreement between France and Spain, France also authorizes an Azeri company to get a French EU VAT number and some other registrations as well. So I put for you the sources here, the official sources, in case you want to go back to it. Now let's see how these compare. And I've chosen what I think are the most relevant countries for you as an Azeri to study in terms of entering into Europe. So I chose Germany, UK, France, Netherlands, Estonia, Bulgaria, and Poland. And there are a few things that we need to consider, that you need to consider when you're choosing which country you want to register to in Europe. Just like when I was presenting Delaware, Wyoming, and Nevada with the seaport. So you have the same thing to take into consideration. How far is it from Baku to ship to this market? Because the further it is, the most costly it is, especially if you send by truck. So I put for you here the distance from Baku to the capital of the country. And you can see that the furthest are London and Paris for you from Azerbaijan. The nearest is Bulgaria, Sofia. It's only 2,800 kilometers, so almost like halfway, than London. And then also, of course, you have Poland, which is not very far, and Germany, which is also quite acceptable. Now, let's compare them from another perspective, not only the distance. So I put here in the second line, does this country require a fiscal agent? And as you can see, the first three countries, Germany, UK, and France, they don't require a fiscal agent, which means that the cost to get a VAT number, the line below, is zero. That means you can apply yourself and get your EU VAT number either in France, in UK, or France, or all the three of them if you wish to. It costs nothing. You just have to fill up the form, and the forms are available publicly. So this is good to take into consideration because this is one less cost. And as you can see here, the others, Estonia, Bulgaria, and Poland, because they require a fiscal agent, yes, they require it. So the cost just to get the EU VAT number in these three countries starts at 1,700 euro per year. So this is what you save thanks to these tricks or good knowledge about France, UK, and Germany. This is your saving per year. Now in the middle, Netherlands, Netherlands and Belgium, they have this limited liability, limited fiscal representation. Now this can be good for you if you don't want to register with France, UK, or Germany, or you don't want to pay the registration with Estonia, Bulgaria, and Poland. You just want to do a test, one test, two tests. This is kind of a pay as you go. So you can ship your pallets or your container to Rotterdam, to a provider, and they will hold that merchandise for you. And let's say you have a buyer from Germany. Once you sell to the German buyer, they will physically get the pallet out of the bonded warehouse in Rotterdam, in the port of Rotterdam, the free trade zone. And then they will pay the VAT, pay the duties, and ship to the German customer same day, because it's only 150 kilometers from Rotterdam to enter Germany. So you don't have to pay anything in advance. You only pay, they charge like a commission. So 5% of the cost of goods sold, COGS. And the good thing is that you can basically contact a provider and set this up within one or 2 days. You can get this ready and ship your pallets to the Rotterdam fulfillment partner. This works very well for B2B and small B2B. If you want to sell pallets or cartons, you're targeting small restaurants, you're targeting small clothes shops that maybe will only buy 100 units or 50 units or 20 units of each item. So this can be a good starting point, because you can deliver same day without paying the VAT in advance, and shipping to Rotterdam by sea from Poti in Georgia can be the cheapest way. So all the other jurisdictions, it will take you a month to get the paperwork ready, to get the VAT number, to get the authorization to trade. It takes 1 month. Even maybe now with COVID, it could take 2 or 3 months because everything is slower. Now, what is very important for you to understand is that with fiscal representation, The good thing is that you only have to collect and pay the VAT in those countries or in the EU. The income tax, you don't have to pay anything to neither Germany, UK, France, or any of the EU countries, because this is a fiscal representation. It is dedicated specifically for the VAT management. So all the money of the sales that you make in Europe will come back to Azerbaijan, and you will pay the taxes in Azerbaijan. So this simplifies your accounting. Basically, you just log them as an export sale in Azerbaijan. And I bring to your attention that for Estonia, Bulgaria, and Poland, the cost of getting a fiscal representation is sometimes it's more expensive than forming a company, a normal company in those countries. And I will share with you later on the company costs of these three countries. So this is a little bit the summary of fiscal representation. And basically here in this case, you have four good deals. I mean, four low entry barriers for you to experiment with this kind of trade. You can choose any of them, Germany, UK, France, or Netherlands, and you can start experimenting pretty quickly how to be active inside the EU. I can, of course, answer some more questions in the question and answers. Now, there is an interesting, very recent development, is that because it was so complicated for its sellers to manage VAT, so Amazon Europe decided to launch their own EU VAT services. And now when Amazon does something, usually they do it well. So right now in the market, the Amazon EU VAT services is the cheapest and I think the most automated way of managing EU VAT. So they have done a partnership with the tax agency called Avalara, which is a UK American company, to offer any Amazon seller the ability to apply for a VAT number in 6 or 7 countries in Europe. That means that Amazon will help you get the VAT number, and then they can help you get up to 6 VAT numbers. They will help you with doing the reporting. So first, it's low cost. For 400 euro per year, you get the VAT number and the reporting tool. You get the customer support on how to apply and get your VAT number. And you get the automated monthly VAT filing solution that will take your sales from Amazon and even take your sales from your shop or your B2B sales and put everything together and report to each country in the proper way. So this is a very good service. This is really, they divided the cost by 4 compared to other providers. Now, the only little trick or the only little blockage is that you cannot access this service as an Azeri company. You have to open an Amazon account with one of the countries that is accepted by Amazon. And you can register, for example, if you do a Bulgarian company or an Estonian company or another company in the EU, then that company or that branch can register an Amazon seller account in Germany or in the UK, and then can apply to Amazon EU VAT services. And if you need more details, they have a nice video and some information and a good FAQ, frequently asked questions, here on this link that you can study further. So this was about all what we have done so far was about VAT management for physical products. Now there is another scenario for those of you who have services like e-learning, accounting, advisory, marketing, or digital goods, downloads, an app, a software, images, videos. You know, if you do those non-material products, then it is much easier for you because it's virtual. Then it's easier for the EU to manage it. They don't have to deal with sanitary, hygiene, you know, danger, physical danger for kids and all these regulations. So for this type of digital services and goods, they have set up what they call the MOS system, which is mini one-stop shop for VAT management. It's called the VAT MOS. It's an online platform where basically you can go as an Azeri company, as whatever company, Brazilian, Chinese, and you can choose any of the European countries as your host. So let's say I want to host my VAT in Luxembourg. So I can go to on the VAT MOS system and I say I want to be hosted in Luxembourg, and then I will get a Luxembourg EU VAT number. Or you could choose, you could say for language, because languages is more easy for me if I register with Estonia, because Estonia speaks Russian, for example. Then you can choose Estonia as your most host country and deal with Estonia about all the other countries' VAT transactions. So this is good to know, and it's free because you can go and apply by your own. There is a whole wizard that you can follow and apply. So it's free, it's fast, again, because there is no physical goods, so you can get your VAT number in a couple of days. And then having a VAT number, having a new VAT number for your products and services will give you the same advantages as physical goods with a traditional EU VAT number. Is that now with the EU VAT number through the MOS system, you can get Stripe, you can get payment solutions in Europe, you can get access to Google App Store, the Apple App Store. You can sell your apps in all these marketplaces that do not accept Azerbaijan yet. They do not accept Azerbaijani developers or designers. Now, with the MOS VAT number, they will accept you. So that's a little bit the advantage if you're in this category of products and services. Again, for the MOS system, I can also answer some more questions at the end. I think now we have covered all the types of fiscal representations, which is very lightweight and cheaper in some countries to start with. But when you cannot, or if let's say you want to access Amazon and the EU VAT number, in some cases you may need to form a full company in the EU. So let's look at the different countries and the different rules. As you know, the EU is 28 countries. Now that's a lot of choice, a lot of differences. But I think from my experience that these 6 countries are the ones that corporate-wise, tax-wise, and logistic-wise, and market-wise are easy for you to deal with, which is the UK, France, Netherlands, Germany, Poland, Estonia, and Bulgaria. Because for you from here, from Azerbaijan, to reach the European market. And as you can see already on the map, it is very obvious that Bulgaria is the nearest. Basically, you can ship either through Turkey by truck, or you can ship through Poti in Georgia by sea. I don't know which one is cheaper. I guess the sea freight is cheaper. But in any case, I think this is a very good opportunity for you guys, at least from a geographic perspective, to enter the EU market. So, but there are other parameters, not only the logistics and distance, but there is also some countries will require you to have a local resident director, and some will not. And if it requires a local director, then it's a complication because you have to find the director that you can trust. You have to pay him or pay her, compensate him or compensate her. And then each country has different costs of registrations, and each country has a different income tax, because now this is no more a fiscal representation. This is a normal company. So a normal company will have to do accounting and will have to declare its income and pay taxes on the net profit. So that is also a parameter of comparison. So I have built for you a matrix, a small table that summarizes all these informations. Like we saw in the fiscal representation, I put the distances in the first line. As you can see, Bulgaria is still the nearest. Now, does Germany require a local shareholder? No, you can be 100% a foreign shareholder. Basically, all the countries, they allow you to own the local company 100%. You can be 100% Azeri ownership for that German, UK, France, Netherlands, Estonia, Bulgaria, or Polish company. Now, some of them, they require a local director. You see here the third line. In particular, Germany, they require you a local director. France, there is a type of company that is called SaaS. I can share more information. That doesn't require a local director. Now, Netherlands, in theory, they do not require, by law, they do not require a local director. But then, if you want to get a Netherlands EU VAT number, then you need the director. So actually, at the end, you end up needing a director. So that's why I put yes. You must have a local director. Otherwise, the others, they don't ask you for a local director. Now, as you can see, for Germany and Netherlands, the fact that you need a local director is going to drive your costs up, you need to pay at least 4,000 euro per year or even more for a local director to represent you, and sometimes they're scared of you at the beginning. So this is kind of making Germany and Netherlands a hard country to form a company in if you don't have any friends, any partner in those countries. Also the costs, you can see that Germany and Netherlands have one of the highest company formation costs, and Poland as well. Poland, so you need at least 1,500 euro to form a company in these countries, and Germany is actually even more. It's 1,800, even 2,000 euro to get a company formed in Germany. I didn't put it here, but there is also a capital requirement. Now, most of the countries can let you start with 1 euro or 500 euro capital deposit, except Germany. Germany will require you to have about, I think, 20 or 25,000 euro capital deposit. So that means that Germany is even harder to form a company in. Now, we have seen the costs and the capital requirements. Now let's look at the taxes, because you will have to declare and maybe pay the taxes, or at least choose to pay the taxes in Europe or pay the taxes in Azerbaijan, if it's depending on which one is better for you. So Germany, as you can see, has one of the highest income tax for corporations. It's 33%. The UK has a reasonable one, 19%. France is also in the high-end taxation, 28%. Netherlands also is pretty high, 25%. Estonia starts to be competitive at 20%. But then you can see here, Bulgaria is very aggressive in terms of attracting foreign investment. They have it's the lowest income tax right now since few months or a year in the whole of EU. It used to be Ireland that had 12.5% income tax. That's why Google is there and the others. But now Bulgaria has just beaten up Ireland with 10% only in corporation tax. They also reduced the employment tax and so many other things that really makes, doing a Bulgarian company and hiring staff in Bulgaria much cheaper than other countries, especially that Bulgaria, the salaries are lower, are probably one of the lowest salaries in the EU. And then you have Poland. So Poland also has a pretty reasonable tax rate, 19%. So these are the different parameters that you want to take into consideration when it comes to forming a company. And as you can see in the EU, as you can see, Bulgaria, since very recently, I think Bulgaria has become a very good option for Azeri entrepreneurs to enter Europe if you need to form a company. And remember, if you want to access Amazon and Amazon VAT services, you need to have an EU company. So among all the EU companies that I have studied, and among the selection of 6, Bulgaria is by far the cheapest and most economical or cost-effective from logistic perspective, tax perspective, and even company formation costs and human resources costs. So I wanted to attract your attention. You can study Bulgaria, and I think a couple of providers in Bulgaria do speak Russian as well. So it may also be an advantage for you in terms of customer support, getting advice, and so on. So I finish with this EU comparison. Oops. And the process of forming a company in the EU is basically the same. It's the same steps as the US company. So you find an agent or a provider, you form the company, and then just instead of the EIN number in the US, in our case here in the EU, you need to get an EU VAT number. That's the only technical difference. It's different forms and so on. And then the providers are different for the bank accounts. So I put for you the bank accounts that can give you a European bank account number. So you have mypost.eu, which is a Bulgarian company, by the way. I mean, it's a UK registered company, but originally from Bulgaria and Romania. And then you have Pioneer, which can get you an EU Euro bank account number and TransferWise. So with these 3 providers, once you have the VAT number and the company documents, you can open the bank account in Europe, a European bank account. Once you have a European bank account, you can open a payment gateway account like Stripe, Adyen, Skrill, or whatever other payment provider that is accepting European companies. Once you have all this and you have a bank statement, then you can open an Amazon account, an eBay, Etsy, or other marketplaces. So as you can see, this opens the doors to pretty much all the e-commerce goodies or tools that you need to access both B2B and B2C market in EU. So I am done with the EU company formation, which is basically closing our chapter here. And I will just summarize, because we have seen so many countries, so many rules and so on. I will just summarize very quickly the best entry points for the US and for the EU. So from my perspective and my experience, it's still Delaware is the best entry into the US from a logistic perspective, and also from a tax perspective and cost perspective, because there are so many providers in Delaware that they are fighting among themselves and they're offering lower prices for incorporation, for logistics and everything. Delaware has a big port, which is called the port of Dover, where you can import containers, pallets at competitive prices. They have good warehouse, bonded warehouse, where you don't have to pay the sales tax at import. So it's good for both B2B and B2C. And of course, if you have a problem with branding or whatever, you can decide to choose any other state in the United States. But just bear in mind that it will cost you a little bit more, either in logistics or in services from your partners. So at the moment, Delaware is unbeatable in terms of cost, prices, and cost effectiveness for the US. And also for you, Delaware is on the East Coast, which by sea, once you pass the Bosphorus Strait, it's the nearest sea shipping. Otherwise, if you have to go through the Pacific, then it's a whole different road and longer, more expensive. If you want to enter the US from the West Coast, like from California, that would be a much more expensive and longer trip by sea. And now I am missing one slide. Sorry, I mixed up two slides. So in terms of best entry points for the EU market, I think you have three options that are quite good for you. If you don't want to engage yourself in commitments like signing a contract, getting a VAT number, having to report every month, then the first option you have is pay as you go. You do pallet by pallet, carton by carton, container by container. If you stop, you stop paying. If you do business, you pay. So pay as you go with the Netherlands, Rotterdam. I put for you in my slide about Rotterdam, at the bottom, there was a source for a company that is providing e-fulfillment, B2B e-fulfillment in Rotterdam. So that could be a first good experience that costs you nothing in advance. Otherwise, if you have to form a EU company, the best choice, as we have seen, could be Bulgaria. That is the nearest for you and the cheapest in all terms. And then it can open for you both B2B and B2C fully in the European Union market. Now, if you don't want to form a company in the EU and you still need a full VAT number, then Germany is probably the best place to start to get an EU VAT number through the fiscal representation, because you can apply by yourself for free. So Germany, France as well, or UK, but Germany, logistically speaking, is a few hundred kilometers nearer for you, if that makes a difference for you. So I have summarized these two aspects of entries into the US and the European market. And now I'll be happy to take as many questions as you guys may want to ask. And please don't be shy. It's better to clarify, especially everything that deals with taxes, registrations, VAT, logistics, payments, anything that may trouble you or may still need some clarifications. I'm happy to answer. So I'll give back the hand to Eldar and Ayhan, and I am available right now for questions. Eldar?
Hello.
Hello, Eldar.
Yeah. So there was one question. Just give me a second.
Sure, I check in the chat.
Yeah, it was in Azerbaijan. So in some states in America, there is a tax for certain goods. and in another states, there is no such tax. What is the reason?
What is the reason?
Uh-huh.
Okay, I'll go back first to the slide where I put for you the US states that do not have taxes here. Do you still see my screen, Allah?
Yes.
Oh, sorry. This
I
one.
mean, I see presentation. Yeah. Uh-huh.
Yeah.
Yeah.
This
it's your
slide.
screen. Yeah.
Yep. Okay. So there are three famous states where there is no sales tax. There is Delaware, Wyoming, and Nevada. And what is important to understand, and maybe Eldar you can translate, is that in the United States there is 3 layers of taxes, of sales taxes. There are 3 layers. There is the federal government, the United States of America as a federal government has a tax at the imports. That's the duties, right? And then once you enter the United States of America, you are actually entering one of the states. Then there is this, what is called the state sales tax. That's the second layer. And let's say now you entered, for example, Nevada, right? Let's say you enter California. So you enter California, you have to pay the California state tax. But then you can enter California from Los Angeles, from San Francisco, from San Antonio, from many different cities like San Diego, right? And then there is a city tax. Actually, there is even city and county tax. So in America, you often have to plus state tax with city and county tax. So for example, sometimes there is a possibility that in Nevada, there is no state tax, but some of the cities of Nevada are going to apply their own city tax. You see what I mean, Eldar?
Yeah, go ahead. Yeah.
Yes. So instead of paying, so of course you save on the state tax, but then you still have to pay that city tax if your customer is there. So this is how it works in the US. Now, why do they apply taxes or not? Is because, like I was trying to explain earlier, it's almost like you have to consider that the United States, it's not just one country, it's 51 countries. Each state is making their own rules as a country. Actually, they are republics. So you have the Republic of California, you have the Republic of Nevada, you have the Republic of Wyoming. Now, each republic, each state is trying to compete to attract foreign investment, to attract businesses from one state to another. So some states, they reduce their taxes to attract investors, to attract companies to open factories and, you know, hire people in their state. And that's why Wyoming, as you can see, Wyoming is pretty stuck in the middle of the United States. And it's mainly a farming area. So for Wyoming, it is a very good strategy to attract new businesses by reducing taxes. Nevada is the land of casinos. I mean, you know, Las Vegas. So likewise, to attract a different class of types of services providers, they also reduce the state tax. Delaware, which is the smallest state in the United States, one of the smallest. They don't have agriculture, they don't have much other things than corporate services and banking. So to attract services and businesses, they also remove their sales taxes. So of course, there are other parameters, but this is one of the main drive for states to apply or not taxes. It depends how much money they need or how much they need to attract new businesses. I hope this answers the question.
Sualı veren Mehman İbrahimliydi. Yani Muhammed de sormuş. Yani ümid edirəm bu cavab verdi də sizin sualınıza.
Shall we do the Arif question?
Yeah, go ahead.
Okay.
Yeah.
Well, first of all, I wanted to thank Mehman for the question. Thank you, Mehman. It's a good question. Now, Arif, again, also thank you. It's a very good question. And I have put the answer in one slide, which I'm going back to it. Sorry. So in the US, the federal tax is about is in average 30%, 33% for the US state tax, corporate tax, income tax. It's between, let's say, 25% and 30 plus percent. In the UK, it's 19%. I think I put it here. Now this is fiscal representation here. So the UK has a 19% corporate tax for the UK, and for the US it's a little bit more. This is the income tax, what you pay on your benefit. And then your question also was talking about startups. How much tax pays startup in the USA and the UK, besides which kind of discounts for them? So there is no discount, no fiscal discount that I know of in terms of income tax. What they have is double tax treaties. For example, if you pay taxes in the United States, or if you pay taxes for that company in the UK and you're the only shareholder, then they will allow you to discount those taxes from Azerbaijan. Or you could tell the American government, tell them, look, I want to benefit from the tax treaty between America and Azerbaijan, and I would like to pay my income taxes in Azerbaijan. So in this case, you don't pay the income tax in America. But there is no obvious, how you call it, discount or advantage beside this. And this would require some advisory from a fiscal lawyer. But generally, income tax is not the main problem for a startup. I think sales tax is more of a problem, because sales tax costs a lot of money to deal with and is something that you must apply. And it's a tax that is different from a city to another, from a state to another. So VAT or sales tax management is actually what is the most complicated to manage. I hope this answers Arif. Yes, startups will only pay income tax if they make income. As you know, startups most of the time are losing money on the first year or first years. So you don't have to worry about income tax at all in the beginning for your startup. But that's not the only tax they pay. If your startup is selling to consumers, then you have to pay the sales tax. So if you're selling an app in America, then you have to apply the sales tax of every state in America where the person who downloads is. And likewise, if you're selling your app in the European Union, you need to apply for an EU VAT number, and you need to you need to charge, collect, and pay 20% to 25% of VAT tax. So in average, the sales tax in America is between 0 and 10%, depending on the state. In Europe, the sales tax or the VAT goes between 15% for the lowest up to 27% for the highest. So the consumer tax, the sales tax, you always have to pay it, but technically it is your customer that is paying the consumer that is paying the sales tax, because you put it in your price. Is that clear enough? What about spin-off company? What do you mean by spin-off? Maybe you can take the microphone, Arif. Can we unmute Arif? Eldar?
Yeah. Again, thanks for your explanation. Spin-off company, it means that a university established this company, and it's look like as a company which working independently and as a growing up from university and working in the market.
Got it. Okay, so
yes, yeah, it's look like this, but it's also mainly focused on the research-based, scientific activity and science commercialization. It's yes. Look like as a research-based, not totally commercial, but coming from research, from education, research activity, etc.
Yes, I'm familiar with it. Thank you, Arif. Now okay. I see what you mean. So, for example, the UCLA, the University of California, has such programs. Big universities, they have startup accelerator or startup incubator, right? So indeed, if you start your startup within a university incubator or an R&D, research and development incubator, they will kind of take care of everything for you, right? They will take care of accounting, sales tax management, corporate tax management, until your business picks up and needs to go to the market, right? That's where you're gonna do the shares corporate spin-off. That means that you divide out of the research institution and you become an entity of your own, right? That's the meaning of spin-off in your case. So this is also a very technical, and normally it's done with lawyers, tax lawyers. But what I know is happening is that there is what they call, it depends if the university has shares in your, has equity or not in your business. So some universities, they take 10% to boost you up. Some they take 0%, they offer you free office, free advice, and so on. So depending on if the university or the research center has actual shares or not, then the spin-off will pay or not taxes. Because if there are shares that have value and then you spin off, it's almost like a sales of shares. So it has its own regulations. But they also do some practice that is called shares swap. So for example, the university will have a corporate body, a commercial body, and you incorporate your own company. And then whatever shares you guys had in the first entity, you swap them with the new shares in the new entity. So there is, in some cases, you can do that, a share swap, which should have some tax advantages. But again, this is like very technical, and usually the university will have a lawyer that will help for this part. And it depends on the state as well, because these are federal and state rules that are applying. But yes, it's a very good way of starting. Is it okay, Arif?
Yes, thank you very much.
Thank you. Thank you.
And Mohammed?
Yes.
I also have one question. In the beginning of your presentation, you mentioned double taxation treaties, and
yes.
But it's not clear for me. So when you establish a company in, let's say, in US or in EU, how can you avoid a double taxation? Because it's not one company that, you know,
yes.
do all these operations. You have one company, or it doesn't matter. You are an entrepreneur or a company in Azerbaijan, and you establish a company, let's say, somewhere in the United States or EU, doesn't matter. So how in this case you can avoid double taxation? Because in my opinion, you still have to pay your taxes in Azerbaijan as a company established in Azerbaijan, and you also need to pay your taxes in US or EU as a company established in EU.
Yes, it's thank you, Eldar. It's always a confusing matter, the non-double taxation treaties, because for one, they are not always, they don't always have the same structure. For example, you could have a non-double taxation treaty that is only for individual income, right, as a person. And then you can have some double taxation treaties that is for both corporate bodies and personal, for corporate income and personal income. So sometimes it's like the two of them, sometimes only one of them, either or. But for example, here you see on PwC, there is the list of countries that Azerbaijan has a tax treaty with for individuals, right? So in theory, all these countries, and is there United States here? There's United Kingdom. Well, unfortunately, there's not United States, but there is United Kingdom, which means that the UK and Azerbaijan have a non-double taxation agreement. So how it works, Eldar, is that let's say this taxation agreement includes corporate income tax for companies. Then you start with an Azeri company and you open a subsidiary in the UK. So the subsidiary is fully owned, the UK subsidiary is fully owned by the Azerbaijani company. 100% of the shares belong to the Azerbaijani company, right? So these two companies are linked one-to-one, 100% through shareholdership. So that means that in Azerbaijan, you have already declared to your government, to your tax authorities, look, I have a subsidiary in the UK which is fully owned by my Azeri company. So when you do that in Azerbaijan, the tax authorities will always ask you to do your accounting for Azerbaijan entity sales plus accounting for the UK subsidiary sales. And Azerbaijan or the UK, they will ask you, look, Eldar, we have a tax agreement between the UK and Azerbaijan. They will ask you to choose what they call the nexus. Nexus, that means you choose your location of taxation. So you, at the beginning of your activity, you can choose. You can say, I would like to be taxed in Azerbaijan. Or you could say, I would like to be taxed in the UK. And the idea of double taxation is whatever you choose to, if you prefer to be taxed in the UK, or if you prefer to be taxed in Azerbaijan for the UK business sales, I'm talking about the UK business sales, you can choose to be taxed in one or the other. And whatever you choose to be taxed in, the other country will respect it and will not re-tax you. For example, let's say your company has made $1 million of sales in the UK through the UK subsidiary, and the income tax in the UK is 19%, let's say 20%. So on 1 million net profit, you will pay $200,000, just to make it simple, as an income tax in the UK. So when you will be bringing back the $800,000 profit after tax, then Azerbaijan will not tell you pay tax now in Azerbaijan on this money, because thanks to the double treaty, you already paid the 200,000 in the UK. So you will not be double taxed on the same income back in Azerbaijan. And likewise, if the UK sales make profit of $1 million and you had chosen to pay the tax in Azerbaijan, which I don't know how much it is, maybe it's lower. For example, the tax for, I don't know, for farmers, I think farm products is even zero or very low. Then let's say you pay only 10% tax in Azerbaijan, then the UK will let you bring all the net income to Azerbaijan to be taxed in Azerbaijan. So the UK will not take the income tax. So this is a simplification of how it works. Of course, there's always some rules. They say you can do this, but not for this kind of product, not for this kind of financial transactions. So sometimes there is a but and some exceptions. But the general rule is this, is that you choose which country you want to pay taxes in, and the other country will not ask you to pay tax again on the same foreign income. Does it make more sense, Eldar?
Yeah. Thank you. Yeah, sure. Thank you.
You're welcome.
So in the beginning, you choose which country you want to pay taxes, and it doesn't matter even if you have two companies, one in each country, you will still pay one tax. You will choose and you will still pay one tax.
That's right, yeah, because it's two companies, but they are linked. They are accounting-wise and corporate-wise, they are linked because it's 100% subsidiary. So technically, the Azeri government, for them, it's still you doing business abroad using a UK company. It's still the same, you see, it's still the same ownership.
Thank you.
You're welcome. Any other chat
Yine
questions?
sorular varsa, kimse İngiliz dilinde sual vermeye çətinlik çəkirsə, Azərbaycan dilində verə bilərsiniz. Yəni mikrofonunuzu yandırıb Azərbaycan dilində sual verə bilərsiniz. Mən Muhammedə tərcümə edərəm. Bunda suallar yoxdursa, so if we don't have any more questions, Ayxan Bey. Buyurun Ayxan Bey.
Yox, sual yoxdur. Sual yoxdur. Biz də gözləyirik. Sual olsa iştirakçılar bildirərlər.
So if we don't have questions, then I think we can finalize this webinar. And next webinar will be this Friday. And the topic is, can you remind us the topic, Mohammed?
Yes, it's, I also forgot. I'll tell you right now.
Just give me a second, I have it on my...
I have it here. month, and that will be
Our next
how to sell on Amazon.
Amazon account, yeah.
Amazon account, yes.
Yeah.
Thank you, Mohammed, for this useful information.
Thank you, Ayhan. Thank you, Eldar. Thank you, all the participants, for
Yes.
your attention.
Thank you, and see you this Friday.
Sure. Thank you all.
Thank you. Bye.
Bye-bye, everyone.
So, bye.